We are heading into 2026, and today I want to talk about all of the investments that I have going into the new year. I want to talk about the reasons that I own each of the stocks that I do. So if you're somebody who's interested in learning how to make money in the stock market, and you want to make 2026 the year that you really start to focus on your finances, or if you just want to do self-directed investing, then this is a video for you, and I think you're going to get a lot of value out of it. If you're if you're wondering who the hell is this guy, and why should I listen to this random dude on the internet, my name is Sheldon. I have been, making completely transparent videos talking about how I invest in the stock market for a little over or getting close to 2 years now, and I've been investing in the market for a little bit over 6, and I've been teaching myself and educating myself on the market for even a lot longer than that. I am not some Wall Street expert trader or some type of professional analyst. I am literally just some dude that has taught myself how to invest in the market, and have grown my portfolio to over 6 figures. So I don't want to waste your time, and so let's hop right into it. I'm going to show you my whole portfolio. I currently have 117,000 and some change in the account. And that is in Canadian, so combined in USD, it's about 85,500. And you can see that since I started investing in January of 2020, I started with $1,000 in the account, and we have watched that grow over the last 5 years, and heading into our 6th year investing. In total, my total profit and loss is around $55,000. And I've contributed $62,500 into the account. And so these are all of the positions that I own. That is the portfolio. If you want to pause the video and look at everything that I have, you can see the average price that I've invested into all of these positions, the current price, the market value. So from top to bottom here, starting with VOO and going down, these are going to be the biggest positions to the smallest. So I obviously have the most amount of money in VOO, around almost 30,000 USD in just VOO. And so the reason that I have that VOO as like the main compound engine in the account is, it's a stability play. And it's a little bit less risky. As my portfolio has grown and as it's just been more and more money in the account, I want this core compound engine that is relatively reliable and something that just kind of tracks with the market. Obviously, individual stocks can be pretty risky. And so when you have something like VOO in there, or just any type of market tracking ETF, it just provides me with a little bit of peace of mind in the account, and it just acts as like this core compounding growth engine for the account. And I like to have it around 30 to 40% of my allocation in the account. Sometimes that fluctuates when stocks run or if the market goes down, but I think moving forward into the new year and a lot of years to come after 2026, like VOO is going to be probably my main position that I own. And I didn't start that way. I started with just individual stocks. And I realized like there is risk involved with that. And I've had, big pullbacks in my account in the past. So, VOO is just a little bit of peace of mind. It keeps I can sleep better when I know at least a chunk of the money in the account is just tracking the market. And you can kind of decide how aggressive you want your portfolio to be positioned by the amount that you're exposed just to the S&P 500 or just to, the broader market. So if you want a more aggressive portfolio, you can, reduce the allocation that you have in your account for VOO. And if you want a safer portfolio, you can always increase your exposure to a market tracking ETF like VOO or any type of fund really that just tracks the market. VOO is just one that I picked because it has relatively low management cost, and yeah, and ever since then I've just been kind of rolling with it. So that's the biggest position that I have. I'm probably going to continue to contribute to that as well. obviously like the returns that I've got on my individual stocks have all been pretty much higher than VOO, but that is kind of the price you pay for the stability that comes with that. Excuse me. So the next one here is Palantir. Palantir has been the best investment that I have ever made. It's one that I've made the most amount of money on. I've probably taken about $20,000 Canadian, which is about 14,500 USD of realized gains in Palantir. I bought into it originally at $8.30 some cents. And originally I bought 200 shares. So I'm down to 35 shares. And as the stock has, exploded essentially in value, like we're up over 2,000% on Palantir, which is an absolute banger of a position. As the stock has kind of run, like I've continued to sell off as it's gone up. So like ultimately in hindsight 2020, I shouldn't have sold any of my shares because it's pretty much at an all-time high. And, I sold some around 100, I sold some around 120, I sold some probably even below 100. So I still made a good amount of profit, but a learning lesson looking back on Palantir is like, sometimes you just got to let the winners run. But again, it was a little bit of a safety play, like knowing that Palantir all of a sudden became this massive allocation in my account. And like it still is, even though I've taken off like the majority of my position off the table, it's still the second largest position in my entire account in some like really volatile growth stock. So I kind of just chipped away at it, took some profits, redistributed those profits into other positions in the account. And I think I'm just going to hold my Palantir shares, hold this position for the time being, and, just let the position continue to run. It is a company that I still believe in. I do think over the long term, it could still be a moneymaker. I think the majority of the big gains that you're going to get out of it have already happened. But yeah, that's Palantir. That's been the stock that really kind of elevated me financially and took me to the next level, and really gave me some more capital to play with in the market and build out some other positions. So next one is AMD. AMD is just a solid stock. I made a video, like my cost basis is 117 on AMD, and I think I pulled up, let's type in AMD. Like AMD is one that obviously you can compare to NVIDIA. NVIDIA's market cap is like $4.5 trillion. So in my mind, AMD still has a lot of time that it can run, and in a year, 2 years plus, I think it could be a $300 stock. It did crash for a really long time, and this is really when I think I started to buy into it. Was around when it was not quite the bottom. I never got the exact bottom, but I got around 117, and then obviously the value of it has really exploded, and it hit a high of like 167 was the high in the last year. And I think it's just like, it's NVIDIA is the clear winner when it comes to, hardware compute power for AI. But AMD is a very close second, and considering that the market cap is, 350 billion compared to 4.5 trillion of NVIDIA, I just think there's still some time and some room to run. And yeah, I mean, that's pretty much my thesis on AMD. Like solid financials, it's a data center play. Like they sell their chips and all of their hardware to data centers, and a lot of these large cloud companies. And AMD is one that I'm going to continue to hold. I don't know if I'm going to add any AMD anytime soon, but it's just one that obviously I still believe in. There's still lots of data centers to be built in the next couple years, and companies are still absolutely blowing their capex through the roof when it comes to AI investment, and they need hardware, and hardware comes from companies like AMD. So Next one, and I'm going to try and go kind of quickly. I don't want this video to be like an hour, so I'm just giving you my high-level thoughts on each of my positions. And if there's any positions that you want me to make a more in-depth video on, let me know in the comments below. I'm definitely more than happy to do that. Costco. So Costco is one that is similar to VOO. It's a little bit of a stability play. It's not going to be, my expectation with Costco is not that it's some high flyer stock. Like, I'm not expecting a Palantir 2,000% return out of Costco, right? And if we look at their stock chart, like, they're just kind of a rock solid company that still has a $1.50 hot dog and a drink. And I just love the company. It's a stability play. Like, if you look at their revenue growth, it's just steady. Like, you're not going to all of a sudden get like a 40% revenue growth quarter out of Costco unless something happens, right? But you're also, on the flip side, you're not going to get minus 40 percentage revenue growth for a year or on a quarter out of Costco as well. It's just a big company that is very, very well ingrained into the economy. And will provide solid returns over the next 3 to 5 years, I believe. Nothing crazy. I don't think it's going to be like, you know, like I said, a Palantir type stock. But look at their revenue growth is really just consistent and solid. They do run very low margins. And one thing I like about Costco is that they are a company, like, they're a big corporation that's like for the consumer. Like, they try to make prices cheap. They run razor thin margins. Like, what is their margin here? I think it's like 3 to 4% or 2 to 4% or something. Like, their operating margin is just under 4%. Their profit margin is under 3%. Okay, so like, you compare that with something like a Meta, and obviously it's like it's just there's a higher cost to running a company like Costco compared to, you know, software companies. And it's just like good to have exposure into that side of the economy as well. Like, if you look at my portfolio, it's like all the big positions is like Palantir, AMD, Meta, Google. All of them are tech companies. So to have one individual stock that's kind of like in the mix of my big kind of like, you know, my top tier positions, that's not necessarily going to get crushed if if this AI bubble pops and if you know, we go into some type of tech you know, crash. Costco might be one that money actually kind of cycles into if that happens. So it's a bit of a defensive play in terms of the bigger positions in my account. And make sure we're still recording. Okay, we're good. So Costco, I don't know if I'm going to add any more Costco either. Like, I'm pretty happy with the size of these main positions, and if I do add to them, I'm going to add to them equally, so to keep relatively the same allocation in the account. So that's the reason I own Costco. Meta is just a profit dog. Like, Meta basically owns the whole digital advertising. Like, not all of it, obviously. Like, Google is a big digital advertising company too, but something stupid like 90 to like 95 or 98% of Meta's revenue comes from digital advertising. And it's just an absolute profit machine. And they still have user growth so many years later, like on all their platforms, Facebook, Instagram, WhatsApp. And like I just showed Costco, but if we look at like the margins of Meta, like, you're going to see what I mean. Like, an 82% gross margin on Meta with a profit margin of 30%. That's 10x. It's a 10x profit margin of what Costco has, right? Like, it's just an absolute money fucking machine is Meta. And they're ripping CapEx right now. Like, they're like 62 billion in capital expenditures. Like, they're making a lot of investment into AI. Just like all these other massive tech companies, right? And then that's up for debate if it's going to pay off or not. You know, some people think we're heading into a bubble, and honestly, I kind of, if the market crashes, then I'm not that upset about it. I have cash that I'm ready to deploy, and so like, I'm kind of in a position where, and a lot of you probably watching this video are as well, that, you know, just I would recommend chipping back on the amount of money that you maybe, or just I would recommend holding a good chunk of cash, because there is a lot of talk about an AI bubble right now. And the thought is like all of this money going into capital expenditures for these big companies isn't necessarily going to pay off as fast or as immediately as, you know, some people think it will, and it's going to take time, and they're going to actually need to replace chips a lot faster. And if that happens, then pop goes the bubble. But that, like the long-term vision of 10 years out, like it kind of doesn't matter, right? So it's still like the opportunity with holding AI stocks is like, I still think it's huge. And I'm okay holding companies like Meta that have billions and billions and billions of dollars that they're throwing into capital expenditures and investment into, you know, developing these technologies further. And it's just a profit machine. Meta is like, Meta is just a beast, and I think it's going to be $1,000+ stock a couple years down the road. Google, kind of one that I just mentioned, like a little bit similar to Meta, like big tech company, AI play, obviously digital advertising play. They own YouTube. What else does Google have? Like they're just a beast company. They have like a smaller portion of their business that they're also allocating to quantum computing, which is one thing that I don't have in my portfolio. I don't have a quantum, like an individual quantum computing stock. I've made videos on like qubits or D-Wave quantum and IonQ. I never made a video on IonQ, but I've done some research on it, and I've looked into quantum quite a bit, and it's very interesting. And I think if I do add some type of new technology into the portfolio, it's either going to be some type of nuclear play or quantum. But I get a little bit of exposure in quantum with Google, and obviously I'm up 200% on that position. Google's been having a really, really good year. So yeah, I'm probably, if I was to add to any position in in these top, you know, 5 stocks here with Google, Meta, Costco, AMD, Palantir, I think Google would be the one that I add in a little bit more and kind of bump up into like, you know, second or third place in the portfolio, just because it's like Meta. It's a profit machine. They got loads of cash. They're just like, people thought they were behind in the AI play, which is similar to another company that I'm going to talk about. Excuse me. But they just kind of continued to put up numbers in their earnings, right? And that's, at the end of the day, that's what matters with all of these companies, is that they just put up numbers. You don't never worry about short-term volatility in the market. Have a long-term mindset. Buy stocks for 3 to 5 to 10 years out, and that's kind of the mindset that I have, and how I talk about stocks on this channel, and sort of the investment philosophy that I try to promote, if that makes sense. Caterpillar, bit of a defensive play as well. Like obviously, to kind of like Costco's, like a lot of big tech in my portfolio. Owning something like Caterpillar can be a little bit defensive, gives me a bit of exposure into a different industry, and something like, I'm also from Alberta, where there's lots of oil and there's lots of big, you know, massive Caterpillar heavy duty equipment everywhere. And they're just it would be so hard for a company to come and knock Caterpillar out of the position they're in, because it's just so ingrained into the ecosystem, into the construction ecosystem, and their distribution and their manufacturing and their supply chain. Like, Caterpillar is just such a solid company with, again, they've been actually exploding lately. And I've made around 71% on Caterpillar. So not too much to talk about there. Like, again, just a defensive play, which has kind of turned into a growth play, but you know, we take that. JP Morgan's one that just I do want, you know, like the way I think about it is I want some level of diversity in the portfolio, right? And so to have one main core kind of financial and banking play is good to have that exposure. Like there's a couple different ways you can think about diversification. Like, you can be over diversified, and that's going to hurt your returns long term, because, you know, like if you're over diversified, then there's going to be no, you can't let some individual positions run like crazy. But if you're under diversified and the market crashes, then you're also going to lose everything. So it's kind of playing this balancing act, and which is why I don't want to own like 20 to 30 different positions. I like to keep it, even this, like I still think sometimes like I have too many stocks. But this is kind of like, that's a little bit how I think about the amount of individual positions you want. Like you don't want to be over diversified, you don't want to be under diversified, and you want to be able to keep tabs on all of the positions in your portfolio. And I think it's nearly impossible to do that if you have 30 plus stocks in in your portfolio, right? Like you're not going to understand the business model and the financials on a deep level if you have that many companies, unless you're doing it like full time. And I'm not doing this full time. This is like something I just kind of do on the side, right? So Caterpillar, JP Morgan, Apple. Apple is, man, I've wanted to sell my Apple shares for like, I don't even know how long. I've wanted to sell Apple for a very long time, mainly because like I just got technology covered in my portfolio. And so why don't I sell it? I pick up my phone. I use my Apple Watch. I use my AirPods. I have a MacBook. Like the products are just awesome. is essentially why I can't sell it. Yeah, like I would love to, maybe swap Apple into more of a growth play, but there's no reason to sell it for me. I see zero reason to sell Apple. Like people are like, oh, iPhone sales are falling or whatever, right? But at the end of the day, in my humble opinion, they make the best hardware technology products for the consumer. The best iPhone or the best mobile device is an iPhone, I think, right? Like you're probably watching this on an iPhone. If not, like that's okay, but a lot of people are, right? MacBooks are amazing. Like I just think they have the best products. So I'm biased in the sense that I'm a fan of Apple, and I'm deep into their ecosystem with their products like Apple Watch, AirPods, whatever, right? And every time I think about it from like a stock perspective, I'm like, okay, I probably could sell it. Like I don't, like I think it's going to be a moneymaker going into the future. But is it going to be as lucrative? Like, is it going to provide the same returns as some other stocks? Probably not. But it's just hard to say, right? But it's a company that I really like. With products that I like. So I don't think I'm going to add to the position, but I also I can't see myself selling it. Because every time I like try to convince myself to sell it, I'm like, yeah, but this iPhone is fucking awesome, right? And everybody loves their iPhone. And if I need a new phone, I'm going to buy an iPhone. So it's just like, why get rid of it in my portfolio if it's going to provide a return over the next 5 years, right? DLRTO, this is just, I only own this right now because I'm journaling shares from Canadian to USD, so that's not really a position. VFV, so these are just some other stocks that I own in a different portfolio, like VIOG, Berkshire, and VFV, that's just in a separate account. That's just like a very low volatility account. Don't really put as much effort into it as my main stocks. But Nike and MDA are the last two that I want to talk about, and then I want to briefly talk about one that I might buy. And this video is starting to get long, so if you're still here watching, drop a like on the video. So in case you're getting any value out of it, and if you want to see more videos like this in the future, let's join the community. And the reason I do this is so we can like build a community of like-minded individuals who are all interested in investing, and we can do this together, right? Learn and share together. So Nike is one that obviously I've lost 30% on my Nike position so far, right? And that's, other than Costco, Nike is one that I'm down the most on. Nike it's just such it's an interesting play. Like I'll pull it up because obviously the stock has been getting fucking hammered for like years. Like if we look on a 5-year, like it's been down for 5 years straight, right? And I just think it's such a global brand, And I personally love Nike products. You can see my gym bag right here, Nike gym bag. And I think Elliott Hill has been the CEO for, I think, a year now. And I think it's a turnaround play. I think the Olympics are in 2026. The World Cup is in 2026. And I just do not want to sell out of this position until I really see all of that through. And there has to be multiple more quarters of, revenue loss. Like, obviously their revenue has been not ideal here. And they really haven't had a good couple of quarters since like 2023. And ever since then, it's been pretty shite, to say the least, in terms of revenue growth, right? But they still make a lot of money. Like, they're still a massive company. Like, they made almost $2.5 billion of net income trailing 12 months, almost $46 billion of revenue. Like, that, it's a massive company. And I think the stock price will reflect the brand recognition again in the future. Is it one that has struggled a lot in my portfolio? And obviously I bought in and have lost around 30% on the position. Yes. But I am not ready to give up on that position. I buy stocks for the long term. I started buying, I don't even know, around year and a half, 2 years ago. And yeah, not ready to give up on Nike. In fact, I might continue to buy shares while the market doesn't want nothing to do with the company. And then in 3 to 5 years from now, I think the stock price will be at least over $100. Could be wrong. It could be wrong. Could be wrong about any of these things that I'm saying. This is just my current mindset with all of my positions and how I'm thinking about things going into 2026. That's all it is. MDA, the last little one that I want to talk about. This is the smallest position in my portfolio. It's a space play. I like space and space innovation and new technology. So having a little bit of exposure into that industry is kind of the reason that I own that stock. And I wish I would have made it a bigger position because I'm up around 140% on that stock, of course, one of the smaller positions in my portfolio. So that is pretty much, my entire account. That's what I'm looking at going into the new year. Would love to hear your thoughts. I have some cash, and two stocks that I've been looking at buying have been Salesforce and Adobe. I think those two are kind of interesting. I think I'll probably cut the video here because it's already getting really long. But do some research on Salesforce and Adobe. I think they're interesting plays, and they could be money makers long term because they've been getting those companies have been getting hit in the market. And that's always when I like to buy stocks, is when a company's been getting hit. Nobody wants anything to do with it. That's when I got into Palantir. And we'll see what happens in the market this year. So thank you so much for watching. I would love to hear your thoughts on my portfolio, if you think I have any gaps in it, if you think I'm positioned well, and also let me know how you are positioned with your portfolio going into the new year as well. Let me know what stocks you own, what stocks you're looking to buy, any stocks you're looking to sell, whatever. Drop a comment and tell me just what you're kind of looking at with your portfolio. I'd love to hear it. So yeah, thank you so much. Drop a like on the video, subscribe to the channel if you're interested in more videos like this in the future. I hope you got a lot of value out of it. I hope you have a fantastic fucking banging 2026. I know I'm going to get after it, so you should too. Have a good year. Happy New Year's. Peace.